Good morning, traders, and welcome back. Gates W. Adams here, and I am back with you. And we have a little bit of a surprise for you. We're going to do things a little bit differently today. As you can see, my background's a little bit different. I am on the road, and we thought we would take this opportunity to change the dynamic here a little bit and let you guys have an opportunity to learn about me. I was really excited about this opportunity because being on the road, I did not want to miss my time with you guys. I would absolutely have missed you all terribly. So what we're going to do today, I'm going to introduce you to a good friend of mine, and he's going to take the role of host today, and I am going to take the role of guest, and I'm going to talk to you guys about some of my trading and my history with the world of trading, and let you guys get to learn a little bit more about your host. So today, instead of being your host, I get the privilege of being your guest on the Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Good morning, and I would like to take this opportunity to introduce you to my good friend Cameron Nish. Cameron is with Apex Trader Funding. I've known Cameron for several years now and had the opportunity to talk to him about all types of topics, particularly surrounding trading. And so we thought this would be a great format to kind of switch it up a little bit. So Cameron, how are you doing this morning?
I am doing well, and I'm excited to be here. This is going to be a fun interview, and we're going to learn about Gates today.
Awesome. Well, let's have it, man. I've got it coming, and I'm excited. So let's see what we've got in store for us today.
Okay, so the first thing that we start these shows off with is that we want to know what your daily routine is. Do you get up, walk the dog? Do you go for a swim? What do you do? How do you get ready to trade in the morning?
So really and truly, my routine probably is more important than anything else for me when it comes to getting ready for trading. I live in Central Time Zone, so market open for me. I really only trade morning session. So market open for me is 8:30. I'm up at 4:30 every morning. The first thing that I'm going to do is kind of just get myself into the right physical and mental mindset to really be focused in, because I've gone through the cycle in and out of trading my whole life. Well, I say my whole life, for 25 years. And one of the things that I've noticed about myself as it's very easy for me to get distracted. So that frame of mind is very important to me. It's easy for me to lose it. So I'm very proactive. So the first thing that I do is I'm going to spend like the first 45 minutes to an hour up. I'm going to be doing some form of exercise, whether it's a long walk, getting on the treadmill, or even some yoga, something along those lines, and just get my body into a state of calm and just kind of get the blood flowing in the right space. And the next thing I'm going to do is I'm going to do a 20-minute quiet meditation. I shut out all distractions. I actually have a little mask that I wear over that completely blocks everything out, and completely get myself centered and in the right headspace. So that to me is a huge and critical facet of dealing with what I know have always been some of my challenges when it comes to trading, some of my challenges with not necessarily getting the process down, but with remaining consistent. Because when it comes to trading, it's not necessarily about having the best strategy. In my opinion, every strategy is going to work for some people, and every strategy is going to be a bomb for some people. It really depends on the person. So it's not really the strategy, it's the trader once they get into that moment. When you're looking at that screen, what is it that you're paying attention to? Are you picking up your phone, scrolling through? Are you thinking about other things? Are you thinking about what you've got on the grocery list for later? Or are you focusing on every tick of the chart?
Yeah, so does it go perfectly like that every morning for you? Or?
Absolutely not.
Okay.
Look, humanity sets in, I'd like to say that I am a perfect 4:30 a.m. every single time. I don't even need the alarm anymore. That is 100% not the case. And I'll tell you where a lot of times it really starts to go wrong is the night before, not the morning. So, look, with the 4:30 wake up time, if I'm not at least winding down by 9:30, I'm pretty well toast. If something has happened in my day and my priorities have shifted, my timetables have shifted. I've hit a schedule snafu at some point during the day. I mean, I could be up at 10:30 or 11, and I know that there's a pretty good chance that my routine is going to get messed up in the morning. And if it does, it doesn't necessarily always take me out of the game, but I always have to take that consideration. Maybe today is not the day that I need to trade, and maybe this is an opportunity to shut the computer down, move on to something else, and maybe get caught up on whatever had me backed up the day before so that I can come back the next day. Because I can tell you, I've had many, many situations in the past where I had a rough evening, a late start to the day, and I'm rushing to get to that computer, and I'm just not right there. And I got to tell you, when that happens, I've learned to identify that feeling. But when it's there and I do trade, it doesn't necessarily go well.
Okay. Yeah, no, and I think that's an important point for our traders, is that it's okay to take a day off. If you don't have the right mentality, or something's messed up in your morning, or like you're saying, the night before, or whatever, you don't have to trade.
Right.
Your boss is not going to get mad at you because you're the boss. Well, I guess you could get mad at you, but it's usually not. So that's interesting. That's sounds like a good routine, good following to get ready for the market and stuff. Now, do you, when you are ready to trade, do you just kind of jump into the charts and start seeing what's going on, or do you look at the news and try to pick a direction or anything, or what do you do for that? Looks like we may have lost you there, Gates.
Well, that's the cabin life, right? You try to trade from a cabin. It's one of those things where it's nice because you get to trade from anywhere, but it also can have internet issues as well.
Yeah. So Zunaid, I have some questions for you.
What's up?
So do you, what's your morning routine? We'll do on that for just a few minutes. I'd like to know how you get ready for trading.
Yeah, absolutely. So right now, the reason that you kind of see me a little bit, not cleaned up is because I'm on the road. I'm doing a couple of other gigs and things like that. So I'm not in my element. So for me, when I'm in a different side where I don't have my monitors and different things like that, I scale down position wise. But in terms of morning routine, I'll still make sure I kind of wake up. I'll take a quick 10-minute dopamine walk outside, get some in me. Sure. Do it that way, and then come back, shower, all that good stuff. But position wise, I believe Gates is back, so I'll put him up here in a second. Position wise, I always want to scale down because I've got other priorities, right? Like if I know that, hey, I've got another show to do at 1:00 in my head, I'm preparing for that. I'm not in the right headspace. I don't have my monitors. I don't have all my charts. So I kind of go ahead and scale down, and I'll bring Gates up and see how he kind of goes ahead and prepares in his positioning sizes versus he's at home or in his lovely cabin. And I'll go ahead and flip in the back.
my apologies on that.
Had a deer run across your projector or whatever. Anyways, so so Zunaid was just telling us about how he gets ready in the morning. We were just finishing up hearing how you got ready. And It sounds like between both of you that this is really kind of part of risk management. Mm-hmm. Right? Even though you're not like in a trade or anything, you're still managing the risk of, hey, is this going to be an okay day for me to trade? Something along those lines?
Yeah, absolutely. And one thing that I'm actually starting to get a little bit better at, and this has been a little bit of a struggle for me, is identifying on that front end what makes for a good day and what makes for an okay day. Okay. And what I've started to do is before I actually get into, so before open, look, I'm not going to trade anything 5 minutes into the open. And I usually try to wait about 15 minutes after open before I really consider taking a position. And as we'll go through here in a few minutes, most of my positions are scalps. So I'm going to try to be in and out within seconds in a perfect world. I'll tell you, I even get a little anxious when I'm in for a minute plus. But when I start my day, what I'm going to do is I'm going to take a look at least the history from midnight up to about open, and just kind of see where that market is moving. I mean, is it a clear directional move? Is it really just kind of bouncing within a range? Is it a really wide range, or is it a really tight range? And for me, I look, perfect world is we have just a major move. And what I'm going to show today are some of the scalp trades that I do, some of the other trades that I do. We actually showed on the show a couple of weeks ago with Ron, where he was talking about what we call the simplicity trade. But when it comes to these scalps, look, in a perfect world, I want to see something that is just moving, and I can just follow that trend. You know, the trend is your friend. Everybody's heard the old adage. And when that is clear, then it makes it really easy to make those decisions. If we're talking about something that's a little bit more in a range, I want to see a wider range. A wider range means that I have room to move. I have opportunities within there. Because what I'm showing a second is that what I'm looking for is I'm looking for turnarounds. I'm looking for reversals. And if you have a really tight range, it's hard to get that reversal with enough room before you get to that limit of that range, and you know, where you start kind of hitting that danger zone where the expectations might not be as strong. So I've gotten a little bit better at identifying some of that where we are before I jump in, because when you're 30 or 40 minutes into a session and you've been sitting there watching the charts, you start to get an idea of where it's going. But that first trade, that first opening, you don't really know unless you look. And I didn't really have that piece of the puzzle for a while until I started realizing that, hey, maybe this is something to step into.
So, okay. So let's take a look at some of your charts here and see what's going on. These look pretty busy, but I'm sure that it's giving you some good information here. Could you kind of go through and tell us where you're taking the trade on this? And
Absolutely.
So also if it's just kind of a general entry, or if there's like some exact places that you're getting in and out, please go ahead and explain some of these charts.
So I want to address that first statement that you made, that the chart looks pretty busy. I get that a lot. And I actually started streaming my trading live at the beginning of the year as I was kind of developing myself and my journey, just kind of show how the journey went for me. And one of the comments that I used to get a lot was that, man, I just, my eyes cross when I look at your chart. It looks so busy. And ultimately, my response to that is it's kind of like driving a standard. If you've been driving an automatic your whole life, the idea of driving a car that's a standard is overwhelming. It can feel a little uncomfortable making that transition, because what you're used to has a level of quote unquote simplicity. What this does is it's the same concept. I've gotten to learn to the point where I understand what it is that I'm looking at and what these things mean. So it's a split-second decision based on a visual representation, and I'll address the candles here in a second. So when I see certain lines, certain levels, they have a meaning for me, which I'll explain here in just a second. But instead of trying to figure out just on a plain chart, just where the price movement is, I'm looking at price movement, but I'm also looking at some historical data that gives me an indication of what to expect. So that's where, using that clutch, using that stick shift kind of comes into play. Yeah, it's a little complicated for a minute, but once you get it, it actually completely simplifies that process. Yeah. So to address this question, these are actually what we call diagnostic charts. They're 10-tick charts. 10-tick bars. So it's a 10-tick reversal to create a new bar, or a 5-tick continuation to create a new bar. So it is literally just a price movement. It is not time-based at all. So what this does is this shows me the flow of the market. If I see a wick on there, I can tell, hey, this has been a more of a difficult move into a new position. If there's no wicks whatsoever, it's a straight smooth move, and that has a little bit more strength behind it. So I'm going to be a little bit more careful on a reversal.
Okay. So just looking at this charts, are there any trades on here that you would have taken? It looks Absolutely. Like there may be one here.
Yeah, actually there's one trade. So when I took this screenshot, and unfortunately I'm in a place where my internet is obviously a little weak, so I wanted to pull up some live charts. It just ended up not being an option for tech purposes. But what you see at that peak, as you get to that tail end of the chart, that was actually where I took the reversal trade. And so what I'm looking for when I see this is I'm looking for a couple of things. The main thing that I'm looking for is a two-piece component, what we call a trapped Xbox. And I say I had nothing into the development of this. I learned this through through Apex Investing, the education company behind, that anyway preceded Apex Trader Funding. But I don't know, it's kind of small, but at the very top of that wick on that peak bar is a red rectangle. And what that represents is exhaustion in that move. What that means is that there is a significant drop in volume, a significant drop in orders as it reaches that peak. So what that's telling me is that the movement has lost its momentum, right? Now, in conjunction with that, there's a little blue dot in here. So again, this is great for people who are visually stimulated. There's a little blue rectangle within inside of that red rectangle, and that is trapped orders. What that's showing me is that there are people who had, in this case, it was moving upwards. So that's showing me that there were some buy orders there that could not get filled. They were trapped. Now, we don't know exactly what those orders were, but there's a significant possibility that these are people who had a take profit at that level, and they were trying to get out of their hopefully, well, in this case, probably a long trade. They didn't quite get it. There was that reversal. And so what I'm looking for is that reversal of more of the institutional traders who are coming back to take those stop losses and in the other direction. So with this trade, I had one other component that made it a little bit stronger for me. That white line that goes all the way across right at that level, that's what's called the mini magnet. That is an area. Now, all of these lines that are going horizontal across the chart, these basically represent areas that have had some sort of significance. Either they've had a spike in volume, they've been an area that's shown a high level of weakness. One way or another, these represent areas where we tend to see either a reversal or some chop or some consolidation right around that area. And if you look back in the charts, you can see this happen over and over and over again. So when I see this level reach this, I get my trapped X box. It happens to be on one of those levels. And if you can see, there's a tiny little orange line that is also forming right there on that white bar. When you have a new one of these show up on an old one, it shows a level of significance that gives it an extra presumption of strength. Okay. So what I'm going to do, I want that bar to be a reversal. My entry literally is one tick past the end of that bar. So it's a reversal bar. The bar opened at the top of the previous bar. So I'm looking for a 10 tick reversal at that point from that open. And I'm going to take the entry literally one tick below that. And I'm going to go for 9 ticks. So I'm basically going until the end of the second bar. My stop loss is actually going to be one tick above the wick of that bar that gave me that indication, right? Because obviously it stops there. So that's a somewhat protected area. So even if it comes back against me, there's a lower likelihood that it's going to go even further than that wick. That's where it stopped. So I took my entry there. And as a matter of fact, it did come back against me, but not enough to take my stop loss. And then it came and shot down and I got my 9 tick scalp on that one.
Okay, so this, it sounds like that you're taking some pretty exact entries, that it's not just an area, so to speak, that you're trying to get in, but there's like an exact price point that you can get in. And it looks like you're maybe using ATM, an automatic trade management strategy, where it's setting your stop loss and your take profits on here. I'm going to go to another screenshot that you've got here, and maybe we can see the same thing on here. Maybe.
Yeah. Thanks for the zoom on that one. That helps quite a bit. Okay. So where I took this one is, so basically we were coming out of some consolidation, and we're still in some consolidation here. But we had a pretty aggressive move from the bottom of that range. And we had the reversal. We didn't quite get the signal on the reversal. See, we didn't have that red rectangle at the top of that first peak, right before you get to the final, the edge of the chart. That's the one right there. So we didn't have an entry there, even though it was coming off pretty close to that level. We did have a retrace. Now that retrace gave us exactly what we were looking for. That now in this case it's a green rectangle because it's at the bottom of a move and it's indicating a long position. So we had the green rectangle with the blue dot in it. It did give us that orange line, so it gave us a little extra indicator there. We weren't coming off of a level, but we were in congruence with the move. So the move was long here. I didn't need that extra line for confirmation. It just told me that it's probably going to continue this move. Maybe not for a ton, but it's going to, I'm good for 9 ticks. Why do I feel like I'm good for 9 ticks? Because I've got an orange and a white line right on top of each other. And then a couple of ticks beyond that, another white line. So in addition to consolidating around these areas, these also serve as magnets. The market is kind of attracted back to them. So if I get all of my ducks in a row and I have a magnet that is more than 9 ticks away, I'm feeling pretty good about that 9-tick move. And in this case, yeah, I got in, I got my 9 ticks, and that one was pretty quick. That one I think just took a few seconds. We didn't have any sort of retrace, and it just went.
Nice. Nice. So another question for you. Are you using your own money to trade this? Is this in like a brokerage account, or are you doing this another way?
Well, I think we're going to talk about some of this here in a second, but absolutely not. I struggled with the mindset of trading for a long time. I had a pretty rough experience in trading 25 years ago. I absolutely would not have considered myself a trader back then, but I was trading. And it left me with what I would consider to be some pretty permanent scars when it came to that trading mindset. So over the course of that 25 years, I tried multiple times to trade. One of my best and closest and oldest friends in the world was, in my opinion, the greatest trading mentor and educator on the planet. I went to his house and he gave me the opportunity multiple times to try to just do a little sort of one-on-one coaching, and I just couldn't get there. And one thing that every situation like that had in common was that I was trading my own funds, and what I experienced was I would paper trade and I would be successful. And then I would deposit into an account, and I know I'm the only one that this has ever happened to. Yeah, but I would deposit into that account, and somehow those dynamics changed, and I would blow my money in a matter of really weeks in most cases. And there was a point where I was convinced that trading was never going to be a part of my future. I just believed that it was impossible for me to ever get there. So what happened was through, of course, a period of time, one of those, that gentleman who was trying to teach me how to trade founded Apex Trader Funding. And really, we had some of these conversations again. And I said, look, if I don't have to put up my own money, maybe that'll change the mindset. I can do it in demo. Maybe I can do it under these circumstances as well. Yeah. Okay. And so at the beginning of this year, literally January 3rd is when I started trading again. And I started trading as trying to operate as a funded trader. Now, it had literally been, I think, 8 years since I had even opened up a chart. So I had to relearn all of the strategies. I had to relearn this whole process again. And I like to refer to the fact that when somebody decides that they're going to start trading and they need to learn a strategy, the mechanics and the psychology and everything behind it, they're starting at ground zero. I was starting at ground -10. Because I had to do all of those things, but I also had to get past this mental block that it was 25 years old, that I couldn't do it. And ultimately, I have. So I have been funded multiple times. This has just been a process that has completely changed the dynamic for me, because while, yes, there's a little bit more pressure in an evaluation than there is in demo, and there's a little bit more pressure in a funded account than there is in an evaluation, none of that comes even close to the level of pressure that comes when you deposit $5,000 or $10,000 in a trading account. And if you lose it, it's gone. Yeah. I spend, less than I would spend on a dinner at Chili's by myself, on an evaluation. Okay. That's literally my financial risk. So that changes the dynamics for me to where I've been able to get out of my own head and focus on the process and the things that help me become a better trader. Nice. So as we've been having this conversation and you've been talking about different things, this whole mindset that you have seems to be a lot about risk management from the time that you start out in the morning
as you place the trade. Now, what happens? We just have a couple minutes here, but I'm interested to know what happens and how your day goes after it. When do you stop? Are you trading at your desk all day, or are you?
That is an excellent question, and I don't. Here's the thing. Okay, so and I know a couple of guys are talking about ticks and everything. So my ATM strategy, my typical risk management on a scalp, or my typical risk reward ratio, I'm shooting for a 9-tick win, and I start off, and I'll adjust it based on where that wick ends on my trade, but as a 21-tick risk, which means that if I did not have the commission factor, I would have to win 70% of my trades to break even, right? So there is a level of precision that is required for me to be profitable in this scenario. And so a 9 to 21 risk ratio with this strategy for me, I know that when I'm on top of my game, when I'm not in my own head, and when I'm trading only when I should be trading, I typically will run at about an 80 to an 85% win rate, which keeps me profitable.
Okay.
What this also means is that if I have a couple of losses, that number starts to get a little bit bigger. So I need to know where it is that I'm going to stop trading. So if I have a down day, if I have 3 losing trades in a row, which doesn't happen very often, fortunately, when you're running at 85%, statistically speaking, you may have one and then you're going to have a couple of ups. It doesn't always happen that way. So if I've got like 3 trades down, I'm 61 ticks down. That's time for me to stop. Psychologically speaking, that's a number where I'm uncomfortable continuing. And if I do, I have experienced the fact that I'm going to make some bad decisions. Now, the flip side is on the positive. If I'm up 3, maybe 4 trades, I'm typically going to be up in that 30 to 40 tick range. That's enough for me. That hits my goal for the day, and I'm done. Why am I done at that point? Because again, statistically speaking, I'm probably going to win the next one as long as all of those other factors are in play. But there are trades that go against you. It just happens. So if I'm 3 to 4 wins up and I take a trade and it goes against me, I'm giving away 2.5 wins for that loss. To me, that's the end. I'm done. I don't want to take that additional risk. I shut it down. I'm done for the day, and I'm ready to come back and start fresh tomorrow.
Okay. Yeah. Okay. That's a good plan for sure. Yeah. Keep it profitable. Even if you have losing trades or losing days, just go on to the next one. It sounds like you trust the system. And just for the folks at home here, these are Gates statistics. These are not necessarily your statistics.
Right. That's me.
So we need to put a little disclaimer in there, but you do seem to be doing quite well with this. And looks like the funding has definitely helped your mindset. Getting paid out is awesome. Apex Trader Funding, of course, pays out more than any other trading company or prop trading company that is out there. We've got a lot of awesome traders, and you're definitely one of them. And I think that we are about out of time here, but I appreciate you letting me interview you and letting people see a little bit more about how you do your trading, and what makes you tick behind the scenes there. So thank you.
I appreciate it. This dynamic has been a lot of fun for me. It's easy being on the other side where I get to ask questions and let everybody else chat forever. So I really enjoyed this dynamic, but I am looking forward to next week to bringing you guys some fresh guests, some fresh perspectives, and all of that. So, Cameron, I'll let you take it away. I think it's time to to announce some winners. I think Zunaid, I think we've got them up there.
Yep, we sure do. So those are the winners that I have. You will go ahead and get an email by the end of day, which will have a promo code, which will, of course, give you the first month for free on any account that you want to go ahead and test out on the eval side. And then after that, every single month, it'll be 50% off. So you still get a nice deep discount. If you didn't happen to win the giveaway, you can go ahead and use the promo code Benzinga to get 80% off of your first month itself. Cameron, any final words from you, Gates? And then we can go ahead and end the show.
No, I appreciate you letting me interview you, Gates. This has been fun and exciting, and hopefully we have some people that are going to sign up and get funded also, pass the test, get funded. I want to pay you. So get to it. Manage your risk and let's get you paid as a trader.
Awesome. And guys, thank you so much. I appreciate being on this side of it. I hope that was helpful. You guys always can check me out online. I love interacting with you guys. And I will be back next week on the other side of the desk with another trader and some great stories. So don't miss it. I'll see you guys then.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the